The market today was really all about one single story. Just one geopolitical headline that completely ignited a massive euphoric rally across the entire board.
And that euphoria, well, it translated into an absolute monster rally. The S&P 500 surged 1.2%, blasting right through that historic 7,100 milestone to lock in a brand new all-time high. Just incredible.
So, what on earth lit the fuse for this thing? It was this: a dramatic 10% plunge in the price of WTI crude oil. I mean, look at that. The relationship between this number and the last one, that's the entire story of the day. And here's the reason why. After 6 long weeks, the Strait of Hormuz officially reopened. This single event just vaporized the market's global supply chain fears. It completely erased that inflationary geopolitical premium, that extra cost that gets baked into oil from conflict risk, and basically gave institutional capital the ultimate green light to buy risk assets. So let's see how this actually played out in real time. We're going to start with our first deep dive, Royal Caribbean. Royal Caribbean was without doubt the purest expression of today's geopolitical relief. It was the perfect proxy for all this good news. And what a move it was. The stock surged nearly 7.5%, just relentless institutional buying that pushed it to lead the entire consumer discretionary sector.
The logic here is so simple, but so powerful. The strait reopens, which causes oil to just plunge. Now, if you're a company running a massive fuel-hungry fleet of cruise ships, that immense cost pressure, it just evaporates. And instantly your forward profit margins look way wider, which triggers this massive wave of buying. It's a perfect chain reaction. Now, let's flip it and look at the exact opposite side of that same coin, Exxon Mobil. So, if Royal Caribbean was the big beneficiary, well, Exxon Mobil was the company that really took the hit from all this good news. The stock took a pretty significant hit, sinking over 3.5%, and it was severely lagging the broader market's euphoric rally. Not a good day for them. The crucial point here is that the very same catalyst had the inverse effect. The strait reopens, and that fear premium in oil just vanishes. So all those investors who were hiding out in defensive energy hedges, using stocks like Exxon as a safe haven, they just didn't need that protection anymore. They rapidly unwound those positions and rotated that capital right back in to higher growth names. But, not every story today was about oil. Our next deep dive introduces a huge narrative twist, a company whose shocking move was completely detached from the day's big macro theme. Let's talk about Netflix. This was the day's major and very painful counterpoint. So while the rest of the market was out there hitting record highs, Netflix was getting absolutely brutalized. It tumbled almost 10% on massive volume, a total bloodbath. So why the huge disconnect? Because the driver here had absolutely nothing to do with geopolitics or oil. This wasn't a market story. This was a company-specific shock. What happened was Netflix suffered a devastating 1-2 punch. First, management issued a really downbeat outlook for their future revenue. Then, as if that wasn't enough, they announced unexpected leadership changes. This just injected a huge dose of uncertainty right when streaming competition is at its absolute fiercest. Investors didn't wait around. They hit the panic button. It really all comes down to this. In a market that's priced for perfection, where these high-flying stocks are expected to deliver flawless execution, lowering your guidance and announcing leadership turmoil is just a cardinal sin. And the market's punishment was swift and severe. Okay, so let's transition from the analysis to the application. How do you sound sharp when you're discussing today's action? That brings us to the water cooler. Here are the key takeaways, and we've distilled them into the exact points you need to sound like you know not just what happened, but more importantly, why it happened. On Royal Caribbean, here's what you say. Did you see Royal Caribbean gap up over 7%? The second WTI crude dropped 10%? The margin pressure on these cruise lines completely vanished. For Exxon, dropping over 3.5% is exactly why we have to actively manage our energy hedges. The geopolitical premium in oil is incredibly fickle. And finally, on Netflix. Netflix dropping almost 10% is a stark lesson in growth multiples. The market despises uncertainty, and right now, Netflix has a vacuum. The S&P 500 just broke 7,100 as the Strait of Hormuz reopened and oil crashed 10%. With the biggest geopolitical fear now off the table,
What do you think is the next catalyst that could derail this massive rally?
Comment below. Subscribe to Market Fluency for your daily edge.